Welcome to Nasdaq Trade Talks. I'm Jill Malandrino, global markets reporter at Nasdaq. We're all aware of how home prices have skyrocketed over the past few years. And with the recent rise in interest rates, mortgage lenders, banks, and credit unions are finding that the home lending business is getting a lot tougher. With us today is Joe Welu. He is the founder and CEO of Total Expert, a CRM and customer engagement platform for banks and lenders, to share his outlook on how financial institutions can reach and reassure reluctant buyers. Joe, certainly a super hot topic in today's economy. Welcome to Trade Talks.
Hey, Jill, thanks for having me. It absolutely is really on people's minds right now. A lot of change going on out there. The inventory shortage in the housing market has certainly been something we've been dealing with for a while, and rising prices. And then, of course, you double interest rates in a very short amount of time. And it's definitely sent some shockwaves through the industry for sure.
What's happening across the home buying market? Has there been a dip in mortgage applications or refinancing?
Yeah, so if you look at year over year, mortgage applications generally are down 54%, okay, which is that combines both people wanting to purchase a home as well as people refinancing, maybe pulling out cash. If you look at just the refinance portion of the market, that's down about 82% year over year. So purchase only, people moving and buying new homes and getting mortgages, that's down about 15%. So in total, the amount of people getting loans right now is 54% less than it was a year ago.
What steps are financial institutions taking to engage consumers and get them back in the mindset of purchasing homes again?
Yeah. So a lot of the organizations that we partner with and work with, and the modern banks and lenders that we see, they're looking at this as an important time, kind of an inflection point where the market is transitioning from one of exuberance, where kind of money is a little bit falling from the sky and you've got to make an above full price offer and just a lot of chaos, to one of which they can actually slow down a little bit, focus on the customer, right? Focus on each individual prospective homeowner, and just stay laser focused on the thesis that, hey, the home ownership is still ultimately the American dream, right? And that's largely belief for most people is that's not going to go away.
Yeah. Well, Joe, historically, have you ever seen another time where rates have doubled in less than a year?
Yeah, so not in my career. I have not seen, if you look at the data historically, the last time we've seen an acceleration in interest rates like this was really in '94. I think was the last time the Fed raised the Fed funds rate by 75 basis points. And so if you look at just the price appreciation and inflationary times, I mean, we're really in historic territory here. We haven't seen inflation at this pace since the early 80s, of course. And so you have never in my career seen anything quite this dramatic in terms of course correction of interest rates going and doubling really effectively in this amount of time. So
what is Total Expert doing to help financial institutions engage potential home buyers who may be shying away from rising interest rates?
Yeah, so there's really three things that we focus on ultimately, and we work closely as a technology partner with a lot of the nation's top lenders and banks. And one of the core focuses for us is helping them deliver the perfect customer journey for every consumer. And if you think about financial transactions and arguably really important financial transactions, buying a home, and that asset for many people is the largest and most important asset. So what we do is partner alongside these modern banks and lenders and ultimately help them deliver education, right? So I'm educating consumers on why homeownership still matters, right? Why in the long run, it's still arguably the best investment most people can make. So we're delivering that education content. We're helping them enable through technology and really augmenting the relationship managers, the salespeople, with the right information. We're enabling them to have really high quality information-rich conversations that help educate customers on what reality is, okay, versus what the media maybe is. No offense to all my friends in the media, but really a contrast to maybe what the buzz and the fear is. So they're really educating. And then ultimately, if you think about what a lot of people want that are maybe early in their careers, they want to understand, they want knowledge, and then they want somebody that can communicate with them and engage with them on their own terms and in a way that's pretty relevant to them. So I oftentimes think about we want to give, you want to, as an organization that's delivering lending products to Americans and people everywhere, you want to ultimately be able to come from a position of empathy, and you want to understand that customer. Usually the way to do that is through data and the ability to then surface how you communicate with a customer and have those things driven by data and technology. So those are some of the ways that that we partner with lenders. And then I would say primarily the last bucket is people really value high quality advice when it comes to important financial decisions. And we partner with organizations and help them do that.
So Joe, back to the education segment for a moment. Are we historically high with rates right now? Sub 6% doesn't sound like it's that high if you look at it historically. And part two to that is, will we ever get back to 2.65, 2.75? Is it realistic to wait that out?
Well, you know, I'm certainly not an economist. However, I would say that it's sort of unprecedented to look at seeing rates sub 3% again. So who knows, anything is possible. But I would say if you talk to a lot of leaders across the financial services industry, everybody believes that it was actually not a good thing to have that amount of liquidity in the market and the cost of funds so low that now what you've done is you've really caused impact to the affordability gap in housing. Okay, so prices rose so quickly. So I think largely as an industry, we look at where's the happy medium. Where does the market, they're going to continue to raise rates until the supply and demand equalizes a little bit. And then you're going to see, of course, housing prices stabilize. So I think it's the educating consumers on, okay, the last couple of years was maybe not a normal environment. But if you look at over the long run, 5, 10, 20 years, owning a home and investing in the American dream is still a great investment long term. And that education is really important when it comes to just broadly financial literacy in this country.
Yeah, preaching to the choir here, Joe. Appreciate the insight. Thanks for joining us on Trade Talks. I'm Jill Malandrino, Global Markets Reporter at Nasdaq.
Thank you, Joe.